This SPX midday update is for informational purposes only. Today is Tuesday, October 19th. It's a little bit after the lunch hour, about 1:20 Eastern, and the market continues to push higher. We are taking profits on the way up. We actually closed the put credit spread early. Yesterday was Monday. We have our Monday 7 DTE put credit spread strategy for SPX. All the conditions were right. You can check that out over on our Patreon page if you want more details on the strategy. But basically, we were able to sell yesterday the 44.65, 44.55 put credit spread. We collected, I think it was $2.90, something like that, or $2.70, excuse me. And with today's gap up and go, we were able to book that spread in a single day for about half the credit. So that means we were able to book the profit for 50% of the max profit instead of waiting another 6 days. And the question right now is, is the market overbought? Are we going to just keep pushing higher? We're looking at 1, 2, 3, 4, 5 days up right now. And if I kind of zoom out, I'm using the Lux oscillator and Lux volatility indicators down here. And in the moment, according to today, despite 5 days being up, we are not officially overbought, or at least the signs of weakening aren't there enough to take a short trade. And I really want to sell some bear call spreads, but I'm really being patient here and not doing that. And I just want to go back to these other times the market was quote unquote overbought. And I'm using the Lux oscillator. I'm going to expand this a little bit. This is the Lux advanced oscillator. And basically we get very, very overbought and you get this sell signal, but you really don't want to take that short until the trend indicator rolls over. So I'm using these in combination together. You can see that the trend indicator actually started to roll over here on this dip. This was back in July. And then you finally got the sell signal here with the indicator moving lower. So that was a better time. Another thing you can look for is the 3 and 5 EMA. Not everyone has this indicator, but the 3 and 5 EMA starts to roll over, and that could be a short-term sell signal as well. You also had this one where the market was hitting new all-time highs and we were getting smaller candles. That's also a sign. Smaller candles in the 3 and 5 were starting to, close in on each other. And then ultimately the trend rolled over. You got the sell signal and then we had a big swoosh down. Well, we're getting there, but we're not quite there. We're seeing some weakening a little bit in the momentum where the oscillator is rolling over, but the trend is very, very strong. And the price volatility to the upside is pretty strong, although it is kind of, slightly weakening today. So long story short, I'm not ready to sell bear call spreads. One thing I will be looking at though is the hourly chart, very similar. And I have these price levels up here. The recent all-time high is around 45.45. I don't know if we're going to get there before we pull back. But again, what I'm looking for is this trend indicator to kind of roll over. This can be similar to like a MACD histogram. That's kind of how I use it, although it is not the same. But ultimately, we're overbought, but the trend is up. And until this trend rolls over, I am not shorting this market. I'm going to continue to watch these levels. We're not really overbought. We could easily blow through this with earnings. So be patient on the short side. You should be taking profits on the way up. If you weren't already long, I also don't think it's a good time to chase here. It's going to be very tricky. We got some new put spreads we want to put on, but given the overbought situation, I may actually wait for a one day down. I know yesterday's video, I talked about reloading on SPY call options. Well, I don't know if I'm going to get the opportunity to because we haven't pulled back yet. But at some point, the market will consolidate, and that's when we'll kind of reevaluate the momentum and where we're at and the levels. And that's what I got for this video. We'll see you in the next one.